going to be leading the conversation. And so in the meantime, welcome to the Ria and 𝗥𝗵𝗲 show. My name is 𝗥𝗵𝗲.
And my name is Ria. And welcome to our show.
And so Ria, without further ado, I'm going to pass the mic on to you.
Thank you, 𝗥𝗵𝗲. Today is our Increase in Financial IQ Lessons Learned from Robert Kiyosaki himself. So let me share my screen. And today we're going to talk on chapter 2. So chapter 2 of the book, Increase Your Financial IQ. And that would be Financial IQ. Number 2 is protect our money. Now, if we remembered financial IQ number 1, financial IQ number 1 is measured in terms of dollars. Financial IQ number 1 is making more money. So it is measured in dollars. Financial IQ number 2 is protecting our money. And protecting our money is measured in terms of percentage. So again, financial IQ number 1 is measured in dollars. Financial IQ number 2, protecting our money, is measured in percentage. So let me give you some examples. So scenario A, a person earns money by working in his job. He gets a paycheck of 100,000. Now that 100,000, he does not get all of it. Why? Because there's such a thing called in America called federal, state, and third is FICA. FICA stands for Federal Insurance Contribution Act. That's what FICA stands for. And FICA funds our Medicare and our Social Security. So if you see in here, if you're working as an employee and you get a paycheck of 100,000, that 100,000 does not all go to you. When you receive the paycheck, you will be deducted federal tax, state tax, and FICA, the Federal Insurance Contribution Act, which funds in US our Medicare and our Social Security. So let's say, let me make this bigger. Let's say this person earns from his job a paycheck of 100,000. So this is the scale. You know, like a scale of justice. So let's say this is your income and this is the tax. Now the income was 100,000. And the tax for this person who works in his job is 50%. So the 100,000 minus 50% of the taxes is 50,000. So the net income will be 100,000. So that's situation case number 1. Case number 2, a person has these triangles, and these triangles are houses. So this person invests his money into apartments, let's say, and he earns 100,000 from his investment. So let's bring on the scale again. And if you look in number 1, the scale here is more even. Now in situation number 2, the scale here is not even. There's more income on this bucket and there's less tax here. Now the income here is 100,000. And here his taxes is 15%. So 15% of 100,000 is 15,000. So that means the net income of this person with assets, his net income after taxes is 85,000. So that's situation number 2, where a person earns 100,000 and he pays 15% of the taxes. So 100,000 minus 15,000, his net income after the taxes are paid is 85,000. Situation number 3. A person earns 100,000 as well. Let's draw a scale. And this is his income bucket, and this is his tax bucket. His income is 100,000. And his tax, if you can see in the scale, is close to the ground. That means he is paying 0%. So 0% is 0. So that means the net income of this person is 100,000. So let's recap again. Chapter 2, Financial IQ number 2, protecting our money. It is measured in percentages. Protecting our money is measured in percentages. Financial IQ number 1, making more money. This is measured in terms of dollars. Now, there are 3 situations or examples here where each and every one are earning the same amount of money, which is 100,000. For situation number 1, he is an employee. So he works in a job, he gets a paycheck of 100,000. 100,000 is not net. This is just gross income. Now in the USA, we have a tax called federal tax, we have a state tax, and we have FICA. FICA stands for Federal Insurance Contribution Act, and this funds our Medicare and our Social Security. So this person who's working in his job, for example, a doctor, he earns 100,000 of salary, of income. Now, because we work, we gain our money from our job, we pay tax. And the tax for this person is 50%. And that is to pay the federal tax, the Social Security tax, the Federal Insurance Contribution Act, which funds the Medicare and Social Security. So if you add all of them combined, this turns out to be 50%. So the income of this person, let's say a doctor, is $100,000 minus 50%, which is 50,000. And I, being a doctor, my accountant informed me that my taxes, after all the federal, state, and Social Security and Medicare combined, we pay 50,000. So our net income, our take-home pay, is only 50,000. 50,000. 50,000 is our net income, not 100,000 that I explained earlier. 100,000 minus 50,000 is 50,000. That's our net income. This is what I have to pay for my expenses, my house, my groceries, my car. So as you can see here, I do not have a lot to do all the stuff for life. I can pay my expense, my home, my groceries, my car, and probably I could have some travel and leisure, but there's really not a lot. Situation number 2 is when a person earns money, 100,000 as well, but then this 100,000 is coming from these triangles. These triangles are apartments, and because it's coming from his investment, the taxes in this particular situation is less. So in this particular example, the tax for your investment is 15%. So if the income from your investment is 100,000 and your tax is 15%, so minus 15,000, so the net income is, after paying all those federal, state, Federal Insurance Contribution Act, which funds the Medicare and Social Security, 100,000 minus 15,000, you'll have a net income of 85,000 from your investments. Situation number 3 is when a person earns 100,000. And this could be a big business or an investor. Now look at the scale here. The income is way up high in the sky. And look at the tax here. It's at the bottom. That means in this particular situation, this person earns 100,000 and he pays 0% of taxes. This person has a net income of 100,000. So if we look at these 3 samples, cases or situation, person number 1 earns 50,000. Person number 2 who earns, so 50,000 is from his job. Person number 2 is from his investments. And the net income is 85,000. And person number 3 could be a big business or an investor, and he pays 100,000. He earns 100,000 and pays 0% in tax. So the net income of person number 3 is 100,000. So among all these 3, the person number 3 in this case with a net income of 100,000, a net income of 100,000 has higher financial IQ number 2. And why is that? Because he is protecting his hard-earned money. He is the one protecting more of his hard-earned money. His taxes is 0. So among all 3, the employee, the investor, the person with apartments, or the big business or a big investor who earns 100,000 and pays 0% tax. Number 3 situation has higher financial IQ. Number 2, because why? He protects more of his hard-earned money. So that's the lesson for today. I hope you understand this, where you are in this particular situation. Are you person number 1? Am I person number 1 who is getting income from the job? Am I person number 2 who's getting income from apartments or any other business? Or am I person number 3 who's earning 100,000 and paying zero? Imagine 0 tax. And that is true. That is true in America. People are paying 0 tax. And so hopefully I've shed light for you, and hopefully we are on our way. I am on my way. Well, I did pay 0 tax last year. So hopefully you guys can pay 0 tax as well. So that why you have more money to do other things, to buy more apartments, to enjoy life, to pay for your expenses, your groceries, your car, and to do other fun things such as philanthropic work, having scholars, doing medical missions. So our goal, my goal, is to continue paying 0% tax. And why am I paying 0% tax? Because I am doing what the government is doing, is wanting me to do. The government is incentivizing all of us. Our taxes, the IRS, it's actually a map that each one of us is encouraged to follow. It's a map, a roadmap for us to reduce our taxes so we can legally pay 0 tax. So that's my topic for today, and I'll share more on our next Alka and Ria show.
Thank you, Ria. Thank you. That was phenomenal information. Wow. So needed and yet so relevant, because a lot of people, you know, they don't know, okay, we need to, why we're paying taxes, whether it's to CRA here in Canada or the, you know, in the US, why are we paying so much taxes to the government? But we could keep that money, and that money, like you said, you know, for travel, for other expenses. And, you know, so friends, I hope that you were taking great notes, because this information, it is so important, so relevant. So I hope that you got a lot of information. And Ria, you know what, one thing that comes to my mind is that when we, you know, you talked about reducing your taxes to 0. Why are we paying so much money to the government, whereas we could keep that money to, you know, for recreation, to pay towards our expenses, you know, the car loans, to, you know, your rent, your mortgage. Now, your mortgage is not a debt, it's an investment.
Well, it depends
right?
on how, it depends on how we look at things, right? So a home, your primary home, it's actually a liability. Majority of us have been fooled that it's an asset. Why I call it a liability, and I may be causing, what, Ria? I may be causing some stir in here. Now, hear me out. Why I say it's a liability, or my primary home is a liability, because I have to pay for the mortgage. I have to pay for the taxes. Now, contrast it to an apartment that's currently being rented by a tenant. The apartment, the tenant pays for the mortgage, the tenant pays for the taxes, the tenant pays for the repairs. Everything is built into the rent, and you subtract all the expenses that goes along from having an apartment. You get net income. That is your cash flow. After paying all the expenses, the taxes, the mortgages, you have a net cash flow. And that net cash flow goes into whose money? To your pocket, to your money. Why? Because your tenant is paying all those expenses. Now, context again, we bring it to our primary home. Our primary home, who's paying for it? I am paying for it. So that
Right.
it's taking money out of my pocket. So in that context, that's why primary home is a liability. Why? Because I am paying for it. It's not my tenants paying for it. So in that situation, my primary home is a liability, and I have to feed it. I have to pay for the monthly mortgage, the taxes, to keep my primary home. Otherwise, it will be taken away by the bank away from me if I don't pay all those liabilities, all those expenses.
Right. Okay. Well, that makes sense, because I too, like our viewers, probably thinking, you know, your home, your primary home, is an asset. So I was in that same assumption. So I guess your home can be an asset if you rent the portion of your house out. Then it's an asset.
Yes, that is correct. Because so let's say, for example, you have a finished basement and you decide to add a kitchen there, you decide to put one full bathroom there, and then you make a separate entrance in your full basement where the tenant, your potential tenant, can get in. And so what now? Your home, your primary home, while having a tenant in the basement, your tenant, majority of the expenses now, it depends on the location, of course, but if you're in a great neighborhood and you don't have a big house, then majority of the times, the rent that the tenant is paying you will go to offset your own mortgage, will go to pay off your taxes, will go to pay off the electricity bill, and what other expenses you have to pay for your own primary home. So in that situation, we call it house hacking, where you actually live in your primary home and you have a tenant beside or below you in the basement or above you in the attic. You're able to multi-purpose that primary home. Then now your home is an asset. Because why? Other people are paying for your mortgage of your primary home. Other people is paying for your taxes and other repairs that are built into the rent. So now your home is an asset. Because why? Asset puts money into your pocket. Other people are paying for it. And that's what I mean by asset and liability. If you just use that concept, asset puts money into your pocket, whereas liability takes money out of your pocket. So that's where you see a home becomes an asset versus a home where you yourself are paying for the expenses is a liability.
Wow, amazing, amazing, friends. Well, I hope you took down a lot of notes, and because we provided gold, it was just, you know, you got gold information right here. So, you know, we hope that you took a lot of notes. So, friends, we have come to the end of the show. Ria, thank you for always sharing those gold information. So we have come to the end of the show, and, you know, take action on what Ria just shared, because knowledge is one thing, and that is great, whether you're hearing from Ria and I, whether, you know, online resources, whether from your mentors, but that is amazing. But if you don't take action, you don't implement on what you're learning, then it just goes to vain, and then, you know, you're not learning because you have not implemented. So always take action, always implement on this information alone, what Ria has just shared with you. So we hope that you take action and you are successful in your business and in life, because at the end of the day, you know, we want to employ you with our knowledge so that you are equipped to really creating a successful life and business for yourself and for your family and for future generations to come who depend on you to make an amazing and purposeful life for you and your family. So take action, be successful, have great success, make the rest of the day the best of the day. We will see you tomorrow.